Hello everyone, thank you for joining us on this Wednesday and welcome to this Specialist Trading educational presentation. Now today I'd like to talk to you by actually asking the question, firstly, is your strategy prepared for a market downturn? Now, I know that's kind of a question that doesn't seem to relate to today's environment. The market's pretty much been going straight up. But the trouble is, most strategies work fine. In fact, even better than fine when the market is cooperating. And usually that just means going up. For example, when last week we had this really strong downward move in the market, that's where students have a very difficult time. As you can see here, last week the NASDAQ fell, capping the biggest two-day decline since September 2020. So as you can see, this was just last week. In fact, last Thursday, less than a week ago. And the markets all of a sudden fell out of bed, especially the NASDAQ. And this is where a lot of traders, potential students, had very difficult time trading the market. Why? Because nothing seemed to work anymore, even in that short span of a week or so of a downward market. So we see, as we look at the chart here, here's where the news came out in the NASDAQ index right here. The trouble is, look at all the downward movement for the previous 2 weeks. Now, this is where students usually lose money because by the time they find out that things have changed, it's already too late. So what you want to do is be able to change with the environment and basically be in sync when the market starts its downward trend. Most traders have a very difficult time with that. Once again, their strategies don't seem to fit or aren't compatible with a downward move. Here's the good news. Today I'm going to share with you a technique that would have been able to get you short right here. And if you missed that setup, would have provided you with another one right here. Now this is a chart of the NASDAQ index. If you wanted to see what that was comparable in the Dow, that would have been basically an over 1,400 point drop in the Dow. So you would have been able to take advantage of that all last week. And then when the market turned and started going back up, you could have had your strategy back in play again. So this is what we're going to learn today. You're going to see how simple it is to apply this technique on our platform, the PTS Primo charting platform that I developed with Pro Trader Strategies. We really strongly feel it's the educational portal that you've been searching for because it really teaches you all these techniques and tips that can really elevate your trading. So this promises to be a great educational presentation today. Thank you for joining us. My name is Steven Primo. I'm the president and founder of Specialist Trading. We are first and foremost an academic company. We are simply here to educate traders because that's our goal as educators, trying to provide you with this information that has stood the test of time. The reason why we really want to do that is because most traders fail because they're not educated enough or they don't take the time to educate themselves with things that really show high levels of consistency. So what's the first thing you do when you don't feel as if you have enough confidence or education or experience? Well, you start relying on someone or something else, right? You go to a chat room, a trading room, or you buy this $10,000 system that you have no idea what it's based on, but it just spits out the buy and sell signals for you, right? Or you go to some guy on a webinar who's supposed to be a market trading guru, or even some guy on TV that tells you what to buy or sell on a nightly basis. See, our entire industry is based upon this model, and ultimately, this is going to make roughly 80 to 85% of traders failures. It's been estimated that 80 to 85% of all traders fail. And why? Because the entire model of the financial industry is based on this, on you basically giving your power away. The way to remedy that and to leave that 85 percentile group is to educate yourself so that you can finally make your own trading decisions. And that's the service we provide at Specialist Trading. We have sound fundamental education that I've accumulated in my 44-year career to hopefully elevate your own trading, okay? Now, before we begin today's educational class, we are required by law to share this with you, so please take a moment to view our disclaimer. I'm going to share with you a lot of performance results using this specific technique that I'm going to teach you today, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Also, please remember that all examples are strictly for educational purposes only. Now, if you'd like to get some more education on a daily basis, I invite each and every one of you to follow us on Twitter. There's our handle right there. I would suggest copying that down because every day I post anywhere from 4 to 6 different bits of information, anywhere from signals our strategies have generated and little bits of information on why they were generated to financial wisdom, quotes and different ideas and insight that I've accumulated along the way. So there's a lot of great free educational information, so feel free to follow us on Twitter. Now remember, we are an academic company. That's our only goal as educators to educate you. So if you've come here today, like other webinars you may have attended, thinking that I'm going to tell you what I think the market's going to do, if it's going to top out or if it's going to keep going, or what the best stock is to buy for this week, or what the best stock is to sell, or what the best time frame is, once again, that goes entirely against our principles and our concepts, because our philosophy is you should make those own decisions for yourself. We're just here to provide you with information so that you can do that. If we were to tell you what we thought the market was going to do, I mean, that would be doing you a disservice, because once again, that's what the entire industry is based on. So we're here to educate you. Our goal is simply to teach you how to trade with the specialist edge, the same edge that has sustained me for roughly 44 years. Hopefully it can do that for you. All right, so in today's class, I want you to ask me as many questions as possible, but we're a little bit different from other webinars. We like to take the questions at the end. So please, if you have a question, wait till the end of the presentation. I promise I'll get to each and every one of them. The only question I will answer is this being recorded? Yes, it is. We record all our webinars, so if you have to leave early or if you have any technical issues, we will send each and every one of you a link to this recording, okay? So remember, if you have any questions, please keep them till the very end, and I promise I'll get to them at the very end of today's class. All right, with that stated, let's begin today's educational presentation. And I'd like to start off by sharing with you some insight that my mentors shared with me. Now, I started out my career on the floor of the Pacific Stock Exchange some 44 years ago. And I struggled tremendously, probably like many of you are struggling right now when I first began. And here's what my mentors shared with me. This is Steve. The secret to consistency is simply to want what the market wants. You see, most of the time, we focus too much on, and probably because we're taught, to determine how high something is going to go, and we try to bet against it. We try to say, okay, well, it's gone up high enough, let's sell. Or we say, it's gone down far too low, it's oversold, let's buy. Or we figure out there's some news that's going to come out, or something with the earnings, or something with support and resistance. But we're not really focusing on what the market wants. We're focusing on outside sources. Remember, our goal as educators is just to make you consistent traders. And the secret to consistency is simply to learn and to listen to what the market wants. Because once you know what the market wants to do, well, then you can just jump on board with any strategy, with any technique, with any model you'd like to, put on your trading plan. It really doesn't matter, because you're going to be in sync with the market. And if you don't believe this concept, think of it. The reason why a trader loses is because you don't want what the market wants. In other words, if the market wants to go up and if you sold, obviously you're out of sync. The market wants to go higher and you're saying, no, the market should go lower. Or vice versa. You buy something and the market goes lower. Well, basically, the market wants to continue going lower, but you're saying, no, it's going to stop. So what you have to do is put away this ego and put away these blinders that tell you to determine what the market's going to do and predict what it's going to do, and just simply listen to it. All right? What direction does it want to go? Simply want whatever it wants. Now, here's the trouble. Most traders think, well, Steve, they say to me, Steve, I've always been taught to trade with a trend, so obviously I want to go with the trend. So if you look at this example here, most beginning students of mine would say, well, Steve, the market wants to go lower. So it's in a downtrend, so okay, I want to be a seller. So obviously you'd either short this or you would stay out of the market entirely. But let's just say you did short it and you decided to say, well, Steve says to always want what the market wants, so I'm going to want to sell this, and then all of a sudden this happens, right? This is the trouble. Most traders really aren't able to listen. They're a little bit late, a day late and $1 short, okay? So what we need is something a little bit more fine-tuned to listening to the market. In order to trade in sync with the current trend, we actually need a tool that translates what the market wants to do. Because see, we're always guessing what it wants to do. And sometimes, we have good intentions. We want to be in sync with the market, but our tools, our techniques are just a little bit out of date. They're traditional wisdom, things that really don't work. So we need something that's coming directly from the source being the chart we're trading, whatever time frame, whatever market. We need it to tell us what it wants to do, a translator, all right? And that translator is easy. You've heard me speak about it before. It's the PET D. This is our market translator. You can apply this to any market, any time frame, and any direction. Now, I've spoken about this for years. It's one of our most popular as well as powerful tools. But for those of you, I see a lot of new faces today. If you've never heard of the PET D, let's explain exactly what it is. It's a proprietary algorithm that I was first introduced to some 4 decades ago on the floor of the stock exchange. At that time, we used to call it the formula because it was a formula that we had to calculate almost on a tick-by-tick basis. But once I teamed up with ProTrader Strategies, roughly about a decade ago, we worked with high-speed computers and with programmers, and we were able to develop it into a color bar tool. So what it does is it colors the bars just 1 or 2 colors, either green or red. That's it. And if the stock or future or currency pair, whatever time frame, whatever market is going up, you should see a confluence of green bars. If it's going down, you should be seeing consecutive red bars. Now, it can also confirm any strategy signal. This is one of the best advantages of having this. So let's say your strategy just isn't performing that well. Once you apply the PET-D, whenever your strategy tells you to buy or sell, that should be confirmed by using this color bar tool. It's a great way to really increase your odds for consistency. But probably the best way to define the PET-D is it's an early trend detector. Why? Because it's translating on a tick-by-tick basis what the market wants to do at that given moment. All right? And even if it changes its mind, it tells you that it changed its mind and it decided to go the other direction. Now, please remember, the PET-D is not a strategy. All right? It doesn't generate buy signals. It doesn't generate sell signals. It doesn't tell you how high something will go or how low something will go. It's not a predicting tool. All it does is translate on a tick-by-tick basis what the market wants to do. But if you know how to use it correctly, which is what I teach in our courses, that's the secret to applying the PET-D, knowing how to correctly apply it to your own personal trading plan. So as we look back at that chart where we had so much difficulty, remember at the time we decided that, okay, we've listened to the market and wants to go lower, it changed its mind and went up. Well, on our platform, it's as simple as clicking on the PET-D tab right here in the upper green strategy tab, and the colors will automatically change. So as you can see, we knew well in advance when we had these consecutive red bars that it wanted to go lower. We didn't have to wait for it down here. And we knew well in advance to change right here when the bars turned green that it wanted to go higher. So as it says, the beauty of the PET-D is that it tells you which direction you should be trading. Remember, it tells you what the market wants to do. And once you know that, you can apply any technique that is in sync with that direction. It can be a strategy, it can be a system, but it will automatically increase your odds for consistency. Why? Because you're listening to the market, you're listening to the translator, and you are in sync. You are wanting what the market you're trading wants. I know a lot of you are beginning traders, or maybe you're frustrated with your current trading method, and you're saying, well, Steve, mine just isn't working at all. I don't even think it'll work with this. Well, here's the good news. I'm going to share with you a trading technique that you can apply with the PET-D. And you're going to see how simple it is. And the theme of the day is to be prepared for a downturn. This works exceptionally well in a downtrending market. And I'll give you the rules to it right now, okay? It's so simple, and it's a pattern recognition. All right, so here are the setups if you want to go short. Remember, we're going to just focus on a down market. All right, you want to see 2 red bars being generated. 2 red bars right next to each other. Now, bar number 2 closes above the high of bar number 1. That's it. When you see that pattern, the market is translating you should sell. Now, it's not telling you exactly where to sell. It's not telling you a limit. It's not telling you where to get out. It's not telling you where to place a stop. Why? Because this is a technique. Remember, a technique is just one piece of the puzzle. It's just one spoke in the wheel. In order to have a full-fledged strategy, you need all of those things combined. So this is just a technique. How you decide to get in, how you decide to get out is really up to you. But that's okay. Half the battle is knowing when to get in. And this is exactly what this does for you. So as we see here, here are 2 bars, all right, generic bars. Doesn't matter what market, doesn't matter what time frame, all right. Once we apply the PET-D, we want to make sure that they're both red. And as we apply the PET-D, we see that they are. Now see, now this was a down day, and the body is colored red. Now bar number 2 is an up day, as associated with the white hollow body. All right, this is the traditional way of looking at candlesticks. If a day's an up day, we're not going to just generically color it green. I mean, that's silly. That was the only reason that was infused into popular trading, was because when candlesticks were first introduced to the West some 50 years ago, most westernized traders didn't have any idea how to apply them. So they said, so all these platforms, I won't mention the names, but all these popular platforms said, you know what, here's a great way to get them to use them and to pay for the candlesticks and to use our platform. When it's an up day, we'll color it green, and when it's a down day, we'll color it red. Okay, that was just something that was formatted in the Western world. In the Asian world, where they first started candlesticks, it was always like this. It was a hollow body. Okay, an up day was just the color of the screen behind it. So as you can see, this is an up day, bar number 2, but what is the outline? The outline is red. So all this is saying this is an uptrend in a still downward trending market. All right. In other words, this is an up day in a downward trending market. Now let's look at the pattern I just taught you. All right. It's a 2-bar pattern. Both bars need to be colored red. And we want to see what the high is of bar number 1. Now, when we say high, we're not talking about the open or close. We're talking about the high of the wick, the extreme high, the range, the high of the range that day. And that's right here. Okay. So this is the high. Now, if bar number 2 closes above that high, that is our sell setup. Okay. So it closed here, as you can see. So this is a valid sell setup, and this is what you're looking for. It's that simple. Remember, trading should be simple. If your trading is so complicated with all this convoluted rules and all this logic that you don't understand and indicators that pile on one on top of each other and just tons of rules that have to be met before you can even take a signal, most likely it's going to get in its own way and it's not going to be consistent. It's the simple things that really work. And this is extremely simple, okay? As you can see here, those are all the rules for an entry for a sell setup. So let's look at this older chart of the Dow. Now, someone looking at this would say, well, Steve, I mean, how can I even get an idea? This is a sideways market, right? We're kind of going down, going up, going down, going up. The market's not telling me anything, and you always say, listen to the market. So I guess the market is saying it doesn't know what it wants to do, and it's just kind of going sideways, all right? Now listen, as I said earlier, you may have the best of intentions of trying to listen to the market, but if you don't have the proper tools, there's no way you'll be able to understand what the market wants to do. You have to have a translator. So let's add our translator, which is the PET-D. Once we apply that, what are the color of all the bars? They're all red. Even the up ones were outlined red, the down ones were filled in red. So even though we've been going up and down and up and down, the market is saying it ultimately most likely wants to go lower unless it changes its mind and starts generating some green bars. Okay? So even though it doesn't look like anything much is happening here, our translator is giving us the confidence to look for this short sell, all right, for the sell setup. So let's look for that 2-bar pattern. Okay, we have a couple of bars here. Here's the high of bar number 1. No, it doesn't work. All right, 2 bars here. Here's the high of bar number 1. Yeah, but we didn't close above. All right, we have 2 bars here. Wait a minute. This may work. All right, bar number 1, bar number 2. Here's the high of bar number 1. And we closed above it. So let's just say we sold on the close. So that's our first sell. Now you had a couple of days down here. And remember, this is the Dow Jones Industrial Average. This is the index. You could use this as a market timing tool. You know, you don't have to actually trade a future or an option on the Dow. But that's a nice little kind of 2-day sell-off. But you're still thinking, well, it's not really enough. So you look for that pattern again. And what do you have right here? 2 bars. Here's the high of bar number 1. And we closed above it. So there's another sell. Let's just say that you bought puts on the index, okay? Or you shorted some stock that is heavily relatable to the Dow Jones Industrial Average, okay? So you're waiting for the market to go down. Doesn't look like anything's happening. And then lo and behold, look what happens that next day. The market dropped 800 points in one day, okay? How did we know that? Well, remember, we don't know. This is not predicting how low something will go. It's just telling you what the market wants to do. And the market was telling us the entire week or two prior to that downward move, it wanted to go lower. Remember, want what the market wants and you'll increase your odds for consistency. The reason why we fail as traders is because we don't want what the market wants. We're doing the opposite. We go to some chat room and some guy says, this stock is too low, you've got to buy it. And you buy it and it keeps going lower and lower, right? Why? Because we're doing the opposite of what the market wants. Or we sell something saying it's so overbought, you've got to get out of this. There's no reason it should be this high. And then you sell and it keeps going higher. Why? Because we don't want what the market wants. We're going against it. If you're in sync with the market, it's like swimming in a river and having the current at your back. It's very simple and it's a very enjoyable ride. All right, so let's look at some current technique examples. You know what to look for, and all these examples are extremely current. By current, I mean in the last 3 weeks. Remember, we haven't even begun to go into a sustained downward market move yet. I mean, we really haven't seen a sustained downward move in years. The last one we saw was just really for a month or two. That was last year in March, but that wasn't sustained. Now, sure, you could have used this technique for a good month, but I'm talking about if we go into, anywhere from 3 to 6 months, possibly a year of downward movement, this technique, I strongly feel, will really be able to help you survive. All right. Remember, everything you're going to be seeing today is captured with the help of applying the PTS Primo charting platform. Remember, we designed this to teach you how to trade, to make trading as simple as possible. All right, so let's start off with eBay. All right, this was coming into March. We see here that we've got a downtrend. Now let's look at the way most traders would trade. We've got a short-term downtrend here. All right. Some traders would say, well, Steve, I like to trade breakouts. And look at this. This is a major breakout. That chat room I go to says you got to buy this because eBay just broke out of this short-term downward move and it's going to have a nice little pop. So that's your justification. Remember, most traders trade based on someone or something else telling them what to do. That goes entirely against our philosophy at Specialist Trading. We want you to make your own decisions, okay? So I'm not going to listen to some guy in a chat room. How do I know how good of a trader they are or even if they're following their own rules? Let's listen to the market. And if we apply the PET D, remember, we wanted to buy right here. The PET D is basically going to tell us that all the bars are red. So should I be buying if the market's telling me it wants to go lower? No, I shouldn't, until I get some green bars, I shouldn't even be having a buyer's point of view. Now I want to search for that 2-bar pattern, and what do I have? Right here at the bottom, 2 bars, this bar is high, and bar 2 closes above it. So that's our sell pattern. Now I can sell at the close, I can sell at the open of the next day, I can, if I want to, place a limit higher. It's up to me. I can buy the puts. Remember, this is not a strategy. It's not a system where you have full-fledged rules telling you exactly what to do. But this is a high probability sell area. And in 4 days, the market fell 7 points. Okay, not a lot, but still, what if you had bought on that breakout? Don't you think 7 points would have sounded a lot better than maybe losing 4 or 5? How about PLTR? All right. Any candlestick traders out there? Most candlestick traders would say, Steve, this is a morning star. This is an extremely bullish pattern, okay? You've got to buy this, and this is usually some type of reversal, and I'm going to step in and buy this. This is probably going to make brand new highs, okay? Well, remember, we don't have anything against candlesticks. In fact, we have strategies based on candlesticks, but we apply them in an entirely different way, a non-conventional way of trading candlesticks, and this doesn't fit our pattern. Remember, we want to listen to the market. What is the market telling us? We apply the PET D, automatically changes the colors, and all the bars are red in that pattern. So are we going to take that morning star reversal pattern? No. What we're going to look for is this 2-bar pattern right here. Here's the high of bar number 1. We closed above that high, and both bars are colored red. So this is a high probability sell area. We could have sold on the close. We could have placed a limit higher, maybe on the opening. It's up to us. Remember, you're in charge of your trading. We will never tell you how to trade at Specialist Trading. That's up to you. But this was a high probability sell area. Stock fell 9 points coming into the first week of this month, March. All right, let's look at Apple. This was coming into March as well. Only looking at 4 bars here, all right? And then what happens? The very first day of March, wow, takes off. At this point, most people are jumping on the bandwagon and saying, you got to go long Apple. Look at that. It just bottomed out. This thing's going straight up. But if we apply the PET D, the PET D is saying this is just a selling opportunity. Why? Because this bar is still outlined red. This is just a bounce in a short-term downtrend. Now, if we look for that pattern, we have it right here. Bar number 1, bar number 2. Here's our sell. And in the first week of this month, Apple fell 10 points in about 4 days, okay? How happy do you think you would have felt buying Apple on that day when it went up and everyone, let's say in some chat room, was telling you to buy it? Oh, by the way, we don't believe in chat rooms either because once again, that's just someone telling you what you should do. or someone saying, why don't you follow and mirror along what I'm trading, right? That, once again, is a disservice. We would never, do that to our students around the world and have them follow or mimic what someone else was doing. We want you to trade according to your own means. In my 44 years of trading, the only traders I know who are consistent, who are still trading today, none of them go to chat rooms. None of them follow fundamental news. None of them watch some guy on TV or subscribe to some blog or anything. They make their own decisions, usually based off really simple rules, okay? As we look at GLD here, this is the ETF for gold. There was a lot of talk here in mid-February about some very big institutional support in gold. It looks like a nice little bottom we made there. All the institutions were buying gold. You got to buy it, right? These guys are never wrong. Well, just a little side note here. I traded with the institutions on the floor of the exchange. In fact, they used to come up to my post because I was a specialist. I made markets and stocks, and they would give me orders. And they personally, my own personal experience, they had the worst track record of anyone I ever traded with. So you can do what you want. I'd never tell you not to, but I personally would never follow the institutions. I don't know why people think that they know more than anyone else. But let's just say, you follow this and say, hey, Steve, the institutions, they've got the big bucks behind them. They're never wrong, right? Well, I'd rather follow the market. What is the market telling me rather than some institution that really has a terrible track record? Well, I click on the PET-D on our platform and all the bars are red. So I don't care if we had a 2 or 3 day bounce. That's a selling opportunity to me. That's not a bottom out. And on top of that, it generated this 2-bar pattern right here. Here's the high of bar number 1. Here's the close of bar number 2. So where everyone else is saying, hey, the institutions are buying this, I'm saying, well, fine, I'm selling it. And gold, the ETF for gold, fell 11 points, okay? What happened to the institutions? What happened to all the basic, support there? As we look at DVA, once again, most traders would say, well, Steve, this is a solid uptrend. Oops, I kind of jumped the gun there. But if we apply the PET-D, now we see that that uptrend was all colored red. All of these bars have been red in the uptrend. If I backtrack here, you see when they were ascending, this is where most traders get caught because they say, Steve, we're going up now. This is a real strong upward move. You said to want what the market wants. Remember, it's not just face value. You have to listen to the market. And the only way you can listen to it is by using the translator. Once you apply the translator, what are the colors? If they're green, then I would say, sure, this is an uptrend. The market's wanting to go higher. But if it's red, this is just a selling opportunity. Now, we actually had a couple of opportunities here. We see we had one right there, bar number 1, bar number 2. And then we can do the same thing right here, bar number 1, bar number 2. So you had 2 selling opportunities. You could have sold anywhere around here. And DVA fell 15 points in the next week or so. Okay. Let's look at FSLY, okay, Fastly. As we can see, a lot of traders feel very uncomfortable when they see something that's come down too quickly and too far. I know I did when I first started trading. My mentors, who were really master traders, they used to be able to sell or buy something when it had gone up tremendously or sell something when it had gone down tremendously. And I would say, don't you think it's a little bit overextended? And they say, well, the market's not telling me that yet. Until it tells me it is, I will be a buyer or a seller, depending on what side of the market I'm on. For example, most traders here would have a difficult time shorting. They say, Steve, God, it's already gone down too far. But if you look at this, all the bars are red. They remain red. And we have the 2-bar pattern right here. Had you sold here in the first day of March, you still could have potentially gained 19 points in the next 4 days, okay? So there's always some room left in it when you think it's gone down far enough. Remember, these are all examples that just happened in the last 3 weeks. As we look at NEO here, okay, here's a downtrend, a current downtrend. And once again, most traders would say, well, Steve, it's kind of gone down a little bit too much. How can I be involved in this? I start thinking about buying things. Well, remember, want what the market wants. If the market wants to go higher, then you start thinking about buying things. Right now, it's not telling us it wants to go higher. So we should be looking for that 2-bar pattern, which we found right here. Here's the high of bar number 1. Here's bar number 2's close. And so it took about 3 days of kind of going sideways, but ultimately we had another setup right here. We could have gone short again, and then we fell 20 points. Potentially you could have captured, okay? As we look at SPCE, here's another example of a candlestick reversal, okay? Looks like we hit some type of major support there. Maybe it was Fibonacci support, whatever. It's a candle reversal. This is where traders get caught up thinking that they're listening to the market. Well, Steve, this is a reversal pattern, candlestick pattern. I'm listening to the market. It's telling me it wants to go higher. Not necessarily. It's a candlestick pattern, sure. It's a reversal pattern. But if you apply the translator, it's not confirming it. Remember, it needs to confirm it with what direction it wants to go. And unless those bars were green, that's not a valid pattern, a reversal pattern to get involved with. And on top of that, it's actually a sell pattern. Here's bar number 1, here's the high. Here's bar number 2 that closes above that high. So where everyone else was buying off that pattern, you're saying, nope, my translator is saying it wants to go lower. And it fell 22 points in the first week of March. As we look at VIR, kind of a sideways market, not much really going on here, but we have the 2-bar pattern. All right. There's the high of bar number 1. Here's the close of bar number 2, so we could sell right there. This was on March 1st. 32 points in 3 days. It really doesn't get much simpler than this, okay? All you're looking at is what the market wants to do. Have you noticed here that I haven't mentioned anything about news? I haven't mentioned anything about earnings. I haven't mentioned anything about institutions or volume, or do I have a ton of indicators plotted on my screen, or support and resistance? I stopped looking at all of those things some 4 decades ago. And if I'm still here, don't you think that those things really aren't that valid or consistent? Remember, our goal as an educator is to provide you and teach you things that have shown high levels of consistency. And I can't think of anything higher in consistency than the PET-D. So that is a translator that really is a tremendous edge to have. Remember, we've only gone down a couple of weeks, and now we're right back up making or flirting with new highs again. What if we go into a sustained downward move? Is your strategy going to be able to cope with that? Will it be able to transfer, all the rules and requirements onto a different environment? Most traders, when they really go into a sustained drawdown, say it's because their strategy wasn't able to deal with the change in environment. Here I'm sharing with you a technique that will prepare you for the next downward move. Now, here's a breakout technique once again in AI. All right, this was coming into March. Obviously, we have a strong downward trend. If you're a breakout trader, this is where you want to buy, right? Well, yes, if it's confirmed by the PET-D. In other words, this bar should be colored green. If we apply the PET-D, it's red. So it's not telling us that this is a valid breakout. So we don't want to get involved in that. We still want to look for the 2-bar pattern. There it is right here. So where everyone else thought that was a breakout, you're selling. And AI went down roughly 45 points in the next 4 days, okay? Now, we're not saying you would have made 45, 20, 19 points. We're just saying that that's how much you had to capture. Remember, your exits, your entries, and your stop placement is up to you. The good news is, if you become a student of ours, in our courses, we teach you multiple ways to exit, multiple ways to enter, and multiple ways to place your stop as well. Here's an example of how most traders get caught thinking there's an uptrend. As we look at SNO here, SNLW, hey, someone say, we're in an uptrend, Steve. We're making higher highs, higher lows. But if we apply the PET-D, that's an uptrend in a short-term downward market. So we don't want to get sucked in. This is how most traders fail. Remember, we want what the market wants. On a face value, most traders will say, well, the market wants to go higher. No, but once you add the translator, you know that it doesn't want to go higher. It's still telling you that for right now, it wants to go lower. And if you look for that pattern, you had 2 chances to go short here and here, because on March 3rd, the stock fell 55 points in the next 3 days. You could have potentially captured up to that if you wanted to. As you look at Amazon, okay, another Morningstar, example here. If you're a big candlestick trader, we have nothing against candlesticks. Like I said, we even have a course for trading candlesticks. The point is you have to know how to trade them correctly. Most traders trade them incorrectly. They trade them face value just off the pattern. You want to be able to confirm it with the PET-D, and as we add the PET-D, we see that none of these bars are red. So the pattern is not confirmed, it's not validated. And what do we have here? We have the 2-bar pattern I taught you today. Here's the high, here's the close, and if you would have sold, coming into the 5th of March, 265 points. I mean, we know Amazon is expensive $3,000 stock, but let's say you bought some puts. out of the money puts, okay? Here's one last example here in Shopify. Now, it looks like we did have a drop here, but the market's trying to make, a stable bottom. And for all intents and purposes, most traders would say, well, Steve, this looks like major support. This is Fibonacci support. This is, I know you don't like to listen to the institutions, but they're buying here. So it looks like we're going to come back up here and at least flirt with these old highs. All right, once again, all of my justification was based on an outside source. What is the source of what I'm trading telling me? Well, I have to apply the PET-D. Even though it looks like a sideways market, the PET-D is telling me all the bars are red for the last week or so. So even though we were green right here, it changed its mind on this bar. And so it's telling us now to look for selling opportunities. And there was this pattern right here. Had you sold on March 1st, coming into the first week, potentially could have captured almost 300 points in 4 days, okay? Now, I know not everyone just trades stocks. A lot of traders trade different markets, different time frames. So let's look at some other examples because this pattern can be applied to any market and any time frame. All right, here's an example of a 2-hour chart of the euro dollar. This was just the last week, all right, starting on Thursday for 2 hours. Looking back in hindsight, someone would say, gosh, how could I have taken advantage of this kind of nice downward move here, this short-term downward trend? Well, the first thing you want to do is click on the PET-D. And this can work, once again, for currency pairs, makes no difference. And you can see here that the PET-D was signaling a downtrend well in advance. Look at these first 3 to 5 bars. They were all red, well before we went lower. So where most traders would have said, hey, Steve, we have a bullish engulfing pattern here. We have some major support. You knew that this wanted to go lower. Why? Because for the very first time, you're listening to the market. So once you know that it wants to go lower, you look for that 2-bar pattern. And what do we have here? One right here. If you had taken this in the next 3 or so days, you could have potentially captured upwards of 180 pips. That's roughly about $1,800 per unit. And if you missed that one, there was another one right here you could have taken advantage of, okay? Now, the same things can apply to EMini Futures. This is the market I primarily trade. Here's a 15-minute chart of the EMini Futures going back to a week ago, last Wednesday. We had a really strong downward move that day. I don't know if you remember, that's when the market was really falling out of bed. Most people will say, gosh, my strategy just kept generating buy signals all the way down. And I lost a lot of money last week because it kept saying it was bottoming out. Remember, we never tried to predict how low something's going to go or how high something's going to go. We only try to listen to see so that we can be in sync with what the market wants to do. And if we apply the PET-D, it's telling us it wanted to go lower well in advance, just like the euro dollar, well in advance. Now, the euro dollar was a 2-hour chart. This is a 15-minute chart. So we can still look for that same pattern right here. Had we taken this pattern setup right here, that's 64 points in 1 day, okay? That's roughly over $3,000 per contract. And we're not saying you would have made that. That's the potential you have. And if you miss that, you had another chance here and another chance here because it's the same pattern. And then lastly, if you're a commodity trader, I used to trade commodities. I never traded feeder cattle though, but here's a chart of feeder cattle. This is a daily chart, okay? Obviously, we're in a downtrend. Once you apply the PET-D, you see that the bar was green here, but then it changed to red coming into March. We can do the same thing, look for that 2-bar pattern and sell right here. I believe this was about 400 basis points to the downside. But do you see, we showed you commodities, currency pairs, futures, stocks, all different markets, different time frames. Makes no difference what market or time frame you're trading. You can apply it to anything. So let's recap before we go into question and answers. Remember, the setup is you're looking for 2 red bars that are generated by the PET-D. Now, bar number 2 of that pattern closes above the high of bar number 1. It's that simple, and that's it. Don't have to look at the earnings. You don't have to go to some chat room and have some guy tell you what he thinks of the market or that stock or future. You don't have to listen to the institutions. Remember, you only have to listen to one thing. That's the market. Now, the trouble is you've never been taught how to listen to that. I know I wasn't. When I first started trading, I did the same things. I listened to probably the same things you're listening to, okay? All the institutions, all the volume, support and resistance, earnings, and none of that worked for me. Until my my mindset of the market changed, that's when I started to become consistent. So hopefully I'll be able to change and instill that consistency in you. So as we close, I want you to ask yourself a question first before you ask me questions. We're already in the first quarter of 2021. Can you believe it? Do you think this technique can help your trading for the remainder of the year? Remember, I just shared with you a bad week we had. Look at all the potential you could have had for consistency, for success, just off examples in the last week or two. What if we go into a sustained downward move? Don't you think this could help sustain your trading? I think the answer is yes. So because of that, we have a great special attendee discount. Thanking you for each and every one of you taking the time out of to attend this presentation today. We're going to give you a great discount on the PET-D, okay? This is our roadmap for any market. We call it our roadmap. It's our proprietary color algorithm. If you'd like to use it on any platform you have, most of the very predominant platforms like TradeStation, Thinkorswim, NinjaTrader, Metastock, MT4, you can apply it. It'll change your colors either green or red. You're also going to get 2 continuation trading techniques, 2 other techniques similar to the one I just taught you, but entirely different rule base. Also 2 pullback trading techniques, entirely different from what I just taught you today, along with a trailing stop technique. Remember, it doesn't matter if you don't trade stocks. You can apply it to any market, any time frame, in any direction. Now, the best thing about this special offer we have for all of you today is that we're going to include 12 months of our PTS Primo charting platform free. But that's until Friday only. You have to decide, make your decision by this Friday. 12 months of the platform, a full year, it costs you thousands of dollars. This is being thrown in entirely free. Now, I know a lot of you would say, well, why do I need this? I can just get the add-on from a platform. Let's say I use TradeStation. I'll just color my bars red or green. That's all I need to know, right? Well, sure, that would be good enough in and of itself. But with the platform, there are so many other things included. There's over 44 years of tips, techniques, strategies I've accumulated along the way that are included on the platform. For example, we see here, you're going to have one-click PET-D access, obviously. You'll get our enhanced buy-sell line feature. This is a great feature for telling the overall trend. You're going to get 4 different of those separate features. You're going to get a strength of trend tool. This is a great tool designed by ProTrader Strategies and myself for deciding if a market is running out of steam or not. It's a great another edge to have in your trading plan. You'll have entry levels, stop placements, a lot of different ways to determine where to enter, where to place your stop, all different tips and techniques and ways in which to trade that I've accumulated. Also, auto-generated exit levels. This is a great technique that will share and show you on the platform where to exit. This is just one of our different exit plans. But here's the best thing. You see the highlighted signal scanner, okay? Because you can scan on a nightly basis for these PET-D setups, okay? You can scan to see if a chart is colored red or even green, and then you can look and search for that technique or any of the other techniques that we teach you in the course. For example, let's say you had scanned for this last week or so, and you saw that ACAD was all red. And you say to yourself, wow, all these bars have been red. This was just last week coming into March. You say to yourself, I'm going to look for that 2-bar technique that Steve taught me. And I would have never been able to even know this stock existed had I not been able to scan for it. So you're looking here, you see here, and all of a sudden you see, well, 1, 2, they're both outlined red, even though they closed up. Here's the high of bar number 1, okay, right here. And bar number 2 closes above it. So that's a sell. So let's say at the end of the day, maybe coming into the next day, you decided to buy some puts. Maybe you shorted the stock. Let's say maybe you were even long the stock and you said, wow, I should get out of this. The PET-D is signaling that it wants to go lower. Either way, you had a really strong warning not to be long, more likely to be short this stock. And then look what happened in the next 6 days. It fell 24 points. This just happened last week. I believe if you would have got short either the first or the second, that was last Monday or Tuesday, okay? 24 points in 6 days. And this is what happened yesterday on the 9th. It opened down, gapped down, roughly that much. This is the beauty of this technique. I'm telling you, it happens over and over again. If we go into a sustained downward move, you're going to want to have something like this in your trading plan, something to help sustain your long positions. So here's our offer today, the roadmap for any success, for any market, and this is successful, technique and tips that we're going to be adding included with this. You're going to get all this along with educational correspondence, my personal email. You can contact me whenever you'd like. Now, the PET-D course and application usually costs, much more than this. We're going to keep the price for one-time fee at $29.95, but remember, we're also throwing in 12 months free of the platform. Combined together, that would cost you close to $5,000. Here's the only other thing we're adding, which is a great edge as well. If you can't come up with $29.95, don't worry. We will take payment plans. So in other words, you can come down with a small deposit and still be up and running as early as today and have a small payment plan each and every month. So this is the beauty of what we're trying to present to you today. We're not going to try and say, okay, well, you've got to spend $10,000 for this, and this is the only way you can do it, and this is going to be increasing next year and stuff like that. We really want to give you a chance to get in. And one of the major reasons why we want to give you a chance is because, as I said earlier, this is one of our most popular tools at Specialist Trading. I personally use this on a daily basis, okay? Now, because of that, the price is soon going to be increasing to $49.95. Now, you want to take advantage of this discount along with the payment plans, because a year from today, if you didn't take advantage of it, you will be wishing that you had, but you'll be spending close to $5,000. And you don't want to, be where you are 1 year from today. So the price is definitely going up. I spoke with Pro Trader Strategies. They're in charge of all the pricing and discounts and all of our course packaging. They said because of this, they're raising the price. So we really want to have this presentation as an early warning to get you in if you're really serious about taking your trading to the next level. Remember, as part of this, along with a full year of the platform, along with all the trading tips and techniques and everything with the platform included, you're still going to get educational correspondence with yours truly. You'll get my personal email address where you can contact me whenever you like. If you have a question, something about trading, something about the Pet D, something about you're not sure how to apply, I'll be there as soon as I can to answer anything that you may have. So this is a great, great offer. Get it now before it goes up in price. Okay? Here's how to take advantage of this great offer. Once again, Pro Trader Strategies is in charge of all the pricing and all the discounting. You can call them. I would strongly suggest calling them directly at 310-598-66. Trading consultants are manning the phones right now. They'd be more than happy to give you some type of estimate on a payment plan. They're very flexible. They'd be willing to work with you. I'm sure if you already have one of our strategies or one of our courses, they would be more than happy to be flexible with you. So this is a great way to get your foot in the door as well with this discount, because remember, it's going up. It's definitely going up to close to $5,000. And that's not including the platform. That's just the Pet D program. Now, this link you see at the very bottom is the link that will take you to the information page and the sign-up page. It's not a live link, but we just posted a live link on the chat box on the GoToWebinar column on the far right. So if you'd like to click that on, it will automatically open up a browser page for you. Okay, I'm going to leave this information up here. And remember, I said I would answer any questions. We have about 10 or 15 minutes left. I will take any questions you have concerning what I just went over. And please don't hesitate to ask. And I'll leave all this up here if you'd like to copy the link down or the phone number so you can give them a call. Excuse me. Can you do exactly opposite in an uptrend, or this strategy works better in a downtrend? Well, first of all, remember, as I said earlier, this is not a strategy. This is a technique. A strategy comes with all the pieces of the puzzle. It tells you exactly where to enter, exactly where to exit, exactly where to place your stop. It has money management format included as well. This doesn't have any of those things. It's just highlighting, like placing a spotlight on a high probability sell area. So when you say, can this also work in a strategy work, it's basically, I just want to make sure this is not a strategy, it's a technique. Now, when you're saying, can it work in an uptrend? Yes, you would just have to do it basically with the green bars. And we didn't cover that. I've covered that before in the past, but I wanted to specifically cover this in a down market and show you the downside, because most traders have a lot of really difficult times when it comes to down markets. They just don't know how to cope with them. They'd like to trade them, and they're used to using the same rules of their strategies. And when their strategies don't perform well, they continue to use them, and it goes into a long series of losses. So this is something I wanted to focus on today, because believe it or not, I talked to a lot of potential students the last couple of weeks, and they suffered tremendously the first week of March in that short downward move because their strategies weren't able to perform in a down market. So I wanted to specifically present this today to give you a little recourse on that. Does the buy-sell line or slope of the buy-sell line play any part in this? Well, the buy-sell line tells you the overall trend. That's another tool that will come with the PTS Primo charting platform if you become part of this. It can, but once again, that's up to you. Remember, this is not a system where we say you have to do that. It's entirely up to you. It's just one more way to trade conservatively. So the PET D is basically a short-term trend identifier. The buy-sell line is an overall trend identifier. Now, if you want to be more conservative, then sure, you would use both of those together. But if you're just using the way I shared with you today, it would just be more of a short-term trend identification, okay? But once again, this is what we encourage. You know, we're not the type of company where we want you to just be told what to do. That's not what we want. We provide you all this information and show you all the different ways to use it, but then we want you to experiment and research and then come up with the best way that meets your needs. So you'll never hear me say in any of our courses, this is the only way to trade it. You have to trade it exactly this way and these are the rules. No, it's always, as long as the basic format is in play, you're able to add and subtract different means as long as the basic format is still in place, okay? Those are good questions. Someone is asking about the platforms. Okay, I mentioned them earlier, but if you want to apply this with your current platform, the main platforms that we service are TradeStation, Metastock, MT4, Sierra Charts, and we do apply this with Thinkorswim, but there's slight alterations you have to make along with it with NinjaTrader. But that's more of a tech support question, and you can contact ProTrader Strategies for that. So you would be able to still apply the PET D with that. But once again, what most traders do is, like myself included, I trade off of my live platform, and basically, in other words, my charting platform that I've been using for years, that is my broker. But I toggle back and forth to get information and signals about the PET D and so forth from the PTS Primo charting platform. And this is what most traders do. You know, most traders have 2 or 3 platforms sometimes running at the same time. So you know, I would suggest doing it that way, because you're rather than just say I just want to use my old platform, you have the best of both worlds. Okay. Okay. Any other questions? Someone says, can you explain educational correspondence? Well, educational correspondence is just basically a way of having your questions answered via me by your personal mentor. In other words, if you've ever taken courses or methods before, or classes, they pretty much teach you everything, give you a manual, and then just throw you to the wolves and just say good luck. But there's not a lot of correspondence. Maybe they give you some tech support. You're actually going to be able to converse with me. I mean, this is my personal email address, and if you have a question about the PET D, or you want to just confirm and say, Steve, did I do this right? Send me a slide and email, and I'll be right back as soon as possible to answer your question. So this is coming right from me. It's not like we don't have some interns answering your questions the way some other websites do, okay? Can you explain about the point after selling? I'm not really sure what you mean, Stephanie, about the point after selling. Not really sure. Can you go into a little detail what that means by the point after selling? Basically, after you sell, you know, you can stay in as long as you point, and you can, as long as you want, and you can use some of our exit plans, which are in the course, to determine where to exit. So that, I don't know if that's what you're asking, but after you sell, obviously you're going to want to know when to get out. Now, there's a lot of different ways to do that. I can't really go into detail right now, but basically they're covered in the course, and we give you different. Once again, on the platform, you have automatic and auto-generated exit levels. So that's one way to exit. But this is pretty much covered in the course, and you can, if you become a member, you can email me and I can explain in detail, okay? Okay, as we conclude here, I just want to say thanks for taking time out of your Wednesday. I hope you learned something. Remember, we're an educational company. I've gone to webinars myself personally in the past just to try and see what's out there and get some type of knowledge as to what people are teaching. And usually what they'll do is they'll throw you some type of carrot and get you excited about something, but they won't explain anything. They won't teach you anything. And they'll say, well, in order to learn, you have to spend $10,000. Well, we don't believe in that. We're an educational company first. And even if you don't become a student of mine, we want to teach you some market behavior, some things to look at. And I hope you learned something today. But most likely, I really hope you become a student of mine in the PET D course. So as we take one last look at our disclaimer, thank you so much once again for attending. I wish you all the best of luck, and I look forward to seeing you in the PET D course. Thanks again. I'll talk to you next week. Bye-bye.